We are coming to you today from the beautiful Lake of Zurich. This summer in Switzerland, like in many parts of Europe, we saw massive flooding causing incredible destruction. Are we starting to see the effects of climate change? Most scientists think so, and many people are placing their hopes on technological solutions like renewable energy or electric vehicles to save us from the worst effects of climate change. With me today to discuss this fast-moving space some are calling the Green Revolution is Daniel Lurch, Portfolio Manager of the J. Safra Sarasin Green Planet Strategy. Daniel, if 2020 was the year of the COVID crisis, it seems like 2021 is looking like the year of natural disasters. What is going on here? And as investors, how should we be thinking about this?
Thanks, Olivier. It's a pleasure to be here today. I think the events in the last months have shown that the climate crisis is real. We have seen significant floods in Western Europe, particularly in Germany and Belgium, with over 200 deaths. In central China, we had a once-in-a-thousand-years flood. At the same time, we had an unprecedented heat wave in the United States and Canada, and more recently in Southern Europe. These events are happening with more frequency and higher intensity, and that shows that climate change is not an issue for 2030 or 2050. It is happening right now, and we need to live with this reality for the next 10, 20, 30 years. Thankfully, there are technological solutions to address this enormous challenge. Renewable energies, recycling solutions, or carbon capture, just to name a few. These are exciting times. We are at the start of a green revolution that will transform many industries and shape the world of tomorrow.
Okay, but I do remember around 10 or 15 years ago, there was a big hype around investing in renewable energy. As I recall, the solar and wind stocks had a big boom and then a bust. So what happened back then?
In the early 2000s, the clean tech sector indeed saw a gold rush-like situation, followed by a big downturn. After hitting an all-time high in December 2007, renewable energy companies were down by around 50% by mid-2012. Interestingly, one of the biggest casualties was the German solar sector, which at that point was a technology leader globally. The sector employed 150,000 people in 2010. By 2016, this number was down to 30,000 people. At that time, the German government cut its subsidies for the industry, as the industry was not at its infancy anymore. China responded by cutting prices and flooding the market with cheap material. That led to a series of insolvencies in the German industry. This is an example of how quickly the dynamics for a young industry can change. But there are reasons to be optimistic that this time will be different.
Well, that sounds like quite a roller coaster. And now, 10 years later, what makes you so sure that we won't go through a similar experience?
Today, the clean tech industry is much more mature and much more diversified in terms of technologies. And it has the structural support of public demand and government policy. The sector remains volatile though, after being up strongly in 2020. In 2021, clean tech stocks are down. But make no mistake, there is no way back. A greener future is coming. We see three key drivers for the green revolution. First, awareness for ecological issues is rising. The public is demanding clean solutions and protection of the environment. Second, greener technologies are getting cheaper and more competitive. And third, governments are committing to improve the environmental situation, either through stimulus measure or more stringent regulation.
Right, let's talk about these drivers for a minute. You mentioned that green technologies are getting cheaper. Why is that so important?
Up until a few years ago, technologies like solar and wind were too expensive to compete with traditional energy like oil and gas. This situation has changed. In some countries of the world, solar and wind are now cheaper than traditional fossil fuels. For example, over the last 10 years, the cost for solar panels has decreased by 80% and the cost for onshore wind by around 40%. Looking ahead, the cost for green technologies will continue to decrease, meaning that they will increasingly displace fossil fuel-based business models.
So clearly green tech is rapidly gaining market share. But right now, fossil fuels are still the dominant source of energy, and I'm guessing that that industry is not going to go down without a fight. But on the other hand, you mentioned that governments or there's political will, strong political wills, in fact, to make the green transition happen. We have seen, however, in the past years, government stimulus come and go. Why is this time different?
This time is different because the commitments to a greener future are global and very long-term. One example is the European Green Deal. The program requires 470 billion euros of investment per year for the next 10 years. And it's very broad. It doesn't only address renewable energy or climate change. Its measures include protection of biodiversity, improve agriculture to ensure healthy food supplies, address building energy efficiency, expand public transport, and improve recycling and the circular economy.
So Europe has a bold plan. What about the rest of the world?
Yes, the EU is not the only example of green stimulus. Many countries in the world have realized that green stimulus is an effective way to kickstart and also future-proof the economy. The infrastructure package of the Biden administration includes significant measures for sustainable transport, electrification, electric vehicle charging, and water infrastructure. The Biden administration plans to have a network of 500,000 electric vehicle chargers by 2030. This is up from around 50,000 chargers today, so a tenfold increase. By contrast, China, which plans to be carbon neutral by 2060, already has a network of around 900,000 chargers, highlighting that the US is under pressure to accelerate its rollout. These are all clear examples of long-term political tailwinds for greener solutions.
Daniel, you've mentioned a number of technological solutions today. What are you particularly excited about these days?
One trend I'm exceptionally excited about is the decarbonization of transportation, specifically the electric vehicle revolution. Many people don't realize that 75% of transport emissions come from cars. So to reduce emissions, it is important that we find a solution for this area of transport. Electric vehicle volumes are expected to grow by around 30% each year for the coming 10 years. Leading car makers like VW and Mercedes have set ambitious targets to electrify their fleets. Still, only 5% of newly registered vehicles are currently battery electric vehicles. This is, however, expected to increase to over 30% by 2030 and nearly 100% by 2050. So from my point of view, this is an exciting technology that will reshape the transport industry and has many implications from an investment perspective.
That sounds like great news for Tesla.
Not just Tesla. There are many ways along the future mobility value chain to invest, such as specialized suppliers or software companies which enable this transport revolution. Examples are companies like STMicro, Aptiv, or Samsung SDI, which produce specialized parts. Without these companies, today's electric vehicles would not work. Going forward, electric vehicles will get cheaper and cheaper, and that means that consumers will increasingly consider them when buying a car, regardless of their view of climate change.
I've also been hearing about hydrogen. Are you looking into that as well?
Yes, hydrogen is another important trend in the decarbonization of transport. Electric vehicles rely on battery packs that are increasingly efficient but need to be recharged regularly and are very heavy. So they're mostly used in passenger vehicles. For bigger vehicles that travel longer distances, like trucks, EVs or battery packs are not a viable option. That is why there's so much hype around hydrogen. On a single tank, these vehicles can travel for around 1,000 kilometers, and the only emissions they produce is water and heat. One big criticism about hydrogen is that it's often produced with natural gas, which obviously creates CO2. We call hydrogen produced that way grey hydrogen. However, as renewable energy becomes cheaper and more accessible, we will see more so-called green hydrogen being produced. This is a nice example of how different green technologies work together to create highly efficient, environmentally friendly solutions.
So clearly the green revolution is moving very quickly with lots of innovation and plenty of investment opportunities. How do you make sense of this complex and dynamic space?
First of all, green investing is more than just renewable energy. We break the green investment opportunity down in 4 buckets: ecosystem protection, future energies, resource efficiency, and smart mobility. Within these buckets, there are hundreds of specialized companies. One example is Acre Carbon Capture, which is a small cap company that is currently rolling out its carbon capture technology. This technology enables companies to remove emissions directly at the manufacturing plant. This could, for example, be very important for the cement industry. Another example is Evoqua Water Technologies, which is a global leader in wastewater treatment solutions. The company will play an essential role in water depollution and provision of clean drinking water, which we believe will be a significantly growing market given the essential nature of clean drinking water. Another example is Infineon, which is a semiconductor company that produces chips, which are used to regulate the electricity flow in electric vehicles or renewable applications. Without these chips, today's electric vehicles would not work. As you can see, we like to play these trends through pure players that are focused on innovative and groundbreaking technologies. Still, it is important to focus on valuations and be mindful of the certain ups and downs in key trends.
Right, let's talk a little bit about valuations. Let's accept your premise that in the long term, the green revolution is unstoppable. Is now a good time to invest?
Absolutely. As I mentioned, the long-term drivers of green technologies are very powerful. So we think investors should be less concerned with short-term timing. Still, we are mindful of valuations and are always on the lookout for valuation bubbles. For example, earlier in the year we found that renewable energy companies were trading at high valuation, and therefore we reduced our exposure to this sector, which so far has been a good decision. In the short term, there might be some volatility, but we believe that over the long term, the green investment theme is only going into one direction. There are some exciting investment opportunities, particularly in small and mid-caps, that operate in niche markets. Not all of them will succeed, but those that do will reward investors nicely. That is why we believe that a diversified portfolio that is actively managed is the best way to profit from this green revolution.
Thank you so much, Daniel. It's great to hear that despite challenges, green innovations are giving us reason to be optimistic. Or in your words, make no mistake, a greener future is coming. And for you as an investor, the question then is your portfolio ready to benefit from this opportunity?